right, welcome back to Coffee Cafe. Right, if you remember from yesterday's class, we officially finished everything that there was for June 10, and we are officially starting on a brand new day, Tuesday, June 11. Okay, and we are also starting a brand new general journal page. Okay, so let's go ahead and see what has happened next. All right, on Tuesday, June 11, right? We received a bill from LV Remodeling Company. Let's take a look at it, right? We got the invoice number 1754. All right, the date was on June 11. Due date is going to be June 15. All right, the item that they billed us for was the remodeling interior for the store, and they charged us $18.90. Okay, so like I mentioned, right now we should definitely take advantage of the terms that they gave us. Okay, so in this case, what should we do with this particular transaction? What kind of expense would this fall under?
Probably under business expense, but I would check the chart of accounts to see if there's anything more closely related.
Okay, so let's see. We got, you said business expense. Okay, is it a freight expense? No. Is it insurance expense? No. Interest. How about labor expense?
That could be, yeah,
Because right now the options
could be a
is is it a subcontractor or is it a temporary labor?
no, it would be a subcontractor because that's who was hired to do the work. Temporary is usually just for, well, it could be a subcontractor.
It
I mean,
definitely is good. It definitely is a subcontractor because in this case we hired them to do us a job, which is to go ahead and design our store, right? We hired them to do a job for us, right? Yes, technically a business expense would definitely be appropriate because yes, you're right. This is a business expense, right? But in this case, we've created a chart of accounts that is a little more descriptive, or in this case, more. In this case, I have a subcontractor expense account, which is a little more in this field of why we hired these people, right? Because we hired them to complete a job for us. They did a subcontracting job, right? To do an interior designing for us. So in this case, subcontracting would definitely be a better option versus a business expense. But if you choose to do business expense, again, looking at the chart of accounts, it is an also available option. Just subcontractor expense, which already exists, would definitely be more appropriate than a business expense.
that's
Okay?
kind of what I figured is there would be something there better.
Right. In this case, so we got a subcontractor expense for 6510. Okay. And of course, we placed it on an account. So it's 611 now. We got subcontractor expense for 6510. Okay. For a grand total of $1,890. And we placed it on an account. So therefore, accounts payable, right? Because we're not paying them now. We received the bill because they completed the job for us. So what we're doing is we are going to acknowledge that we owe them money. So we're going to increase our liabilities because we owe them money. We have, how many days do we have until we have to pay them? From the 11th, we have 4 days to pay them. So in this case, we owe them 4 days. So in this case, who did we receive this bill from? LV Remodeling Company. What was the proof of the transaction?
invoice number 1754.
Okay. And we have 4 days to pay, right? Now you could put in here, right? In this case, since there's nothing what in this regards that the subcontract expense was for, you could go ahead and put a little description saying this was for interior design. Okay. So again, nothing was involved, no check, no purchase order, no nothing there, no deposit necessary. So in this case, we can go ahead and go to our ledger to go ahead and plug in our numbers. So in this case, we're going to take a look at my expenses. Let's see. We got subcontractor expense right here. Excuse me. Interior design store. Excuse me. General journal, page 4 this time for $18.90. Excuse me, guys. All right. Oops.
Well, you still got the sneezes, but are you feeling better today, Lynn?
Yes, I am. Thank you. All right, $18.90. And then let's say we got some accounts payable. Right? Invoice number 1754.
Right.
General journal, page 4. And we're going to increase our liability by $18.90. So that's going to bring my account balance up to $13,753.90. We just keep increasing our debt to larger and larger and larger. Okay. So in this case, that's also a no bueno, but it's the price of us having to get everything done before opening our store. And that means we got to start selling soon. Okay. After that, we got to go to our subsidiary ledger because we involved with LV remodeling. So LV remodeling. Here's a Las Vegas land LV remodeling right here. Today is the 11th. What did you get billed for? Interior design. For store. Invoice number 1754. Post reference. We're still on page 4. Terms. Were we given terms?
Yep.
Yes. 4 days. So therefore, right, it was already written on the bill when our bill is due on the 15th of June. Okay. No prepaid accounts because we never met them before and paid them in advance, but we were billed for $18.90. Okay, and we have not yet paid. Okay. So again, our formula is going to be invoice amount minus prepaid minus returns minus discounts minus payments. And there you go. My gray bottom bar has already told me that so far I owe LV Remodeling $18.90. Awesome. Okay. No need for inventory because this is us receiving a bill for a job that was done. So in this case, we can go ahead and safely move on to the next transaction. Okay. Here, let's see what happened here. We end up hiring Irene Jameson. Okay, so Miss Irene Jameson. Okay, we hired her for in-store help. Okay, we're going to pay her $12.50 per hour with no extra benefits. Okay, she is subject to have to work for 40 hours per week, Friday through Tuesday. Okay, and of course, the week that she starts on is going to be the 14th of June. So that means she's going to start this upcoming Friday. And of course, payroll period is bi weekly, which started on June 10th. Okay, and ends on June 23rd. Okay, that's just a little heads up information. If we go ahead and take a look at our calendar, right? So if on my calendar, we already said payroll week started on the 10th, right? And it will end on the 23rd. So how employees are going to record their hours is they're going to record accordingly, right? Meaning, because if she starts on the 14th, that means she's going to start clocking in her hours on the 14th all the way up to the 23rd, and then we pay her that following Friday. All right, we need a couple days to process the information and so on and so forth, collect all the information we need from her, and be able to process her paycheck for her to have it available on Friday. Okay, Friday, the 28th of June. So as you can see, payday is right there. Okay. Now, there's also things that we also have to take a look at here too. We're gonna have our grand opening sale starting on the 17th of June. So at least we are aware that we're almost done setting up our store here. Okay. All right. Let's see what else is on the 14th. End of the week for the first trial balance, which we will complete on the 14th. So anything this entire week, there's nothing left to do on that entire week of calendar there. So that's just something to keep in mind, especially if you're doing a payroll system. That is how it works. It depends on when the pay period is. So in this case, it's bi-weekly. So that means we're going to start on Monday and end on a Sunday, 2 weeks, 2 Sundays from now. And then from there, we collect all the information for the timesheets, and then we process the checks and make them available for the following Friday of that payroll period ending week. Right? So that means that's something that we have to keep in mind. So we have this information about Irene. What do we do with this information? Can I record this? Can I start recording this transaction?
No, because she hasn't earned any money from us.
Correct. She hasn't even started either. We just hired her. But it is something that we could keep a note on just in case for anything that we do need to, in case, right? What's pertinent when we hired her? What's
Yes.
important when we
So,
hired her?
how much she's getting paid per hour,
Correct. So in this
and
case,
then
good.
and then that we are not giving her any benefit,
Mm-hmm.
and then we expect her to work 40 hours a week,
Mm-hmm.
and then first her first paycheck would be ending on the 6/23rd.
Yes, her first pay period. Yes, perfect. So if I'm not going to record this in my journal, where would I record this information?
Oh, I know there's a sheets for the employees on the sub.
On the subsidiary.
Yeah,
Correct. Right? Well, in this case, it's not the most accurate it's not the most accurate, but it's the information that we need to just be able to process things for her, right? Employee, right? What is her first name and so on and so forth, right? In this case, we're not using this table to enter in all of her, information such as date of birth, social security number, or her W-4 form, right? That is for whoever is in charge of the HR, which is going to be the boss, right? The boss is going to be collecting all the information. All we need to record here is what information do I need to do to be able to process the payroll for her? So in this case, pay date is going to be the 28th, right? And then we set an employee's first name. We know that her name is Irene, and we know her last name is Jameson. Okay? And again, pay rate $12.50 per hour. Now, in this case, can I go ahead and say she clocked in her 40 hours yet?
No.
No, because we don't know the situation that Irene is going to come across. She might call in sick one of the days. She might request an extension. We might have to overpay her. I don't know what the situation is, but right now we cannot determine how many hours she has clocked in right now because we haven't even she hasn't even started to work yet, and two, she right, and the second thing is that we don't know what her schedule is going to be like for her to come in her times that she's supposed to be scheduled to come in, right? We don't know how many hours she's going to be working until we receive her timesheet on that very Sunday, June 23rd. So in this case, that's all the information we need to put in here for now, and we will process her payroll on that Friday. Okay. All right. What about the next one where it says here that we also hired Tim Harrison, okay, which is a bartista, right? And he's going to be paid salary, okay, of roughly $40,000, okay? So that means he's going to be getting about $1,500 per paycheck, okay, which is going to be also bi-weekly as well. Scheduled to be work starting on Tuesdays through Saturdays, okay, from 8 a.m. to 8 p.m. No benefits, starts to work and training tomorrow. So this guy, what is the difference between Irene and Tim?
He's salary.
Tim is salary. Does it matter how many hours he works on for Tim?
No, unfortunately.
No, unfortunately, but he is scheduled to be there for at least 12-hour shifts. Let me see, Tuesday through Saturday. So what is that? Still 5 days a week. So in this case, he's doing at least a minimum of 80 hours. Minimum. Oh, no, wait. Yeah. This is 12 hours. Excuse me. 12, minimum of, 80 hours. Which is different because he's a bartista, right? We're a coffee shop. We can't be having Irene, who has not been trained how to use the coffee brewers, how to use the coffee grinders. We can't expect someone like her to be able to produce the coffee, right? Because if we are supposed to be holding up the brand name of whatever the coffee shop was previously, right? We need to hire a bartista who knows how to make the good coffee. So in this case, that is why we hired a bartista to do this. And of course, they're salary based because they're going to be primarily the person that's going to be on the floor constantly producing all this coffee for us, right? So they need to be here most of the time and majority of the week, right? Sundays and Mondays are usually going to be a lot slower, right? Because Saturday is always going to be the popular days, Friday, Saturdays, and so on and so forth. Right? So that's what we hired Mr. Tim Harrison to do. He's a salary-based earnings. That means he's going to roughly get $1,500 per paycheck. Okay? So that means it doesn't matter how many hours he actually clocked in. And he's starting to work and start training tomorrow. Okay? So what else? What should I do with this Tim Harrison?
Go find him on the employees list.
We'll put him on the employees list. When is he going to get paid? Same thing. He's going to get paid the same day as Irene. His name is Tim.
Tim Harrison.
Tim first name. Harrison is his last name. Does he have a pay rate? Yes, $1,500 per paycheck. How many hours? I mean, he could clock in his hours as long as he meets the time frame that he's at least met the 12-hour time period, right? Now, in this case, he's training by using all of our new equipment. So he's going to be figuring out what the menu is going to be and so on and so forth. So making the menu is not also going to be it's time consuming, but at the end of the day, we hired a barista. They're going to be making the coffee, not Irene. Irene's going to be running the cash register. Okay? Awesome. Right? And then let's see what else. We also hired Albert Allen here as a sales representative, right? He's going to be a 1099 worker, all right? And he's going to be based off of commissions, right? Commissions is going to be up to 40% based on total sales that he earns, right? And benefits are deducted from his commissions, okay, which in this case, no benefits. And work to start on the 17th of June. So he's not going to start till Monday. We're going to hire Mr. Albert Allen to be our sales representative. So what he's going to do is he's going to be looking for customers that he can sell to as a reseller. Okay? So as in we are going to be acting as a wholesaler and selling the coffee by the pound. Okay, so not only are we a retail store, we're going to act as a provider to the public, but also a provider to other smaller stores. Okay, we're going to act as a wholesaler. So in this case, that's what we hired Albert to do. Is he's going to be in charge of finding those customers to sell to as a wholesale price, and of course, he's going to earn 40% of the sales as commission, and that's how he's going to get paid. Now, in this case, if everybody else don't get any benefits, he doesn't get any benefits either. Okay? So what do we do with his information?
At least so we know he get paid when other two gets paid.
Okay, yes, but in this case, he gets paid the same as everybody else, right? The same payroll period. That means if Friday, June
Yes.
28 is going to be payday for everybody, he's also going to get paid the same day.
Yes.
Now, is Albert Allen an employee?
Well, it said the benefit is deducted from the commission check.
He is an employee because he's a 1099 employee, but that's an independent contractor. It's just a different type of employee.
Okay, now here's one thing that you have to know. He's technically not an employee. These benefits meaning like if we provide fringe benefits or if we provide medical insurance or something like that that they can also get from us, that is something that maybe he can maybe go for, but we can't cover him. Does that make sense? We can't pay into his social security because he's an independent contractor. So if you guys remember from chapter 12, what do we treat our independent contractors as? If they don't belong on the payroll,
No, they're treated as vendors.
they're treated as vendors, correct. So in this case, we pay them for whatever that they earned, and that's it. We don't take anything out from there. Okay, this deduction benefits is in case like we pay for meals. Well, of course, we can provide the meals for Albert as well, right? And it's gonna come out of his paycheck, right? That's what that means right there. There's no actual benefits such as paying into a Social Security or Medicare. None of those are going to be part of him because he doesn't get those benefits because he doesn't actually work for our company. He's just contracted to provide whatever thing that we need to have done, and he's going to be considered an independent contractor, right? He serves himself. He is self-employed. Okay.
So on the subsidiary journal ledger, do we have him in there as a vendor?
In this case, no. But what if we go to the subsidiary ledger? Do we have a separate account for him?
Yeah, that's what I'm. Do we have him in there as a vendor?
Not as a vendor. I did not put him in there as a vendor.
So then where did you put him?
Well, let's take a look. If I have customers, vendors, employees,
Oh, commissions expense.
yes, I have him under his commissions because this he doesn't really need to have his own profile. I mean, you can create one for him, but at the end of the day,
Gotcha.
it's going to be this more or less the same form, right? You're going to end up paying him for what he's earned, and that's it. Is there any means to have him bill us?
Well, no, not really. They
It,
do, but
it,
they don't.
yes, they can't they can forward a bill to us saying, "Hey, you owe me this money," but technically that's why I don't put them under a vendor because he's not going to bill me for his job. I'm going to pay him for what he's earned. So what am I doing here is not only am I keeping track of his sales, I'm making sure that I'm calculating the correct amount that I'm giving him because again, sales is part of my of the entire business, right? Even though he's going to be dealing with other customers, right? He's still overall a part of the sales portion. So I need to ensure that my sales is going through by ensuring that he completed the sales, right? So I'm going to use him to keep track of the sales, and I will be calculating and keeping track of his timesheet that he submits to me on the 23rd, right? And telling me how much money I owe him. But at the end of the day, he doesn't go around and bill me for it. I also have to verify that this is true, that he did do these sales. We did receive these monies, right? So in this case, he gets his own little table for himself for his commissions, right? So in this case, who is the person? Albert Allen. Okay? Albert Allen. Okay, so this is what's going to happen is we're going to keep a good track record of Albert Allen and how much sales he has completed. So that means, as you can see, pay date is going to be the 28th. Payroll period begins on the 6th and ends on the 23rd. He's going to be getting how much percent for the commissions?
40.
He's going to get 40%. Okay? So we'll be calculating alongside with him, okay? And we'll figure out how much money that we actually owe Mr. Albert Allen. Now, not only that, we are also responsible to also fill out those sales orders for Mr. Albert Allen, okay? Because why? Well, we also have to ensure that he does his job and delivers all these things to those customers. So we need to make sure that whatever he is set out to sell to this particular in a particular customer, right? We need to ensure that he also submits or he also delivers them, right? So that's what we need to do, and we need to ensure is that once that sales order has been made, we need to ensure that he does actually do this because again, he's representing our company, right? He's representing our company by delivering the coffee to these individual customers. So we need to make sure that he does his job. Okay. All
So
right.
I know we will get to this when we do the financial statements and stuff, but commission expense then would be located on the income statement under sales
No,
and under payroll.
it will not be under sales. It will be under expenses.
Okay.
Okay. But in this case, it's under payroll, yes. just because, again, there's no point to have them separately. Now, it might be better if we put them under subcontractor expense, right? Because this is technically someone we contracted. So in that case, yes, in that case, that would make more sense instead of having them under payroll. But for now, I just put him under payroll because he does work for our company, but he's not an employee.
Okay, I'm just trying to get them into my category in my head so I know where everybody falls. So thank you.
Mm-hmm. So in this case, Albert does work for our company, but he is not an employee. He gets to come in whenever he wants. He gets to do his job because his job is to go find customers to sell to. He's
Right.
not waiting around to pull in customers that come from outside, right? He's going into his books, calling all these other local shops and said, hey, are you interested in buying my product? So, as of our job and what we're providing him, he doesn't actually work as a part of operations in our company, right? His only sole job is to help us find customers to sell as a wholesaler. You know, but we're
Right.
providing the product, right? That's the point of an independent contractor. He's going to give us different results than us doing the job for him. Does that make sense?
Yeah, yeah,
Mm.
I get it. I just needed to know which box to stick him in my head. So,
But technically, you are correct. If you really wanted to, he does fall under a vendor. Yes.
okay, I've got
Hmm.
it.
It's
Thanks.
just and then I don't know if you noticed this, but if you wanted to, in the Excel files too, I also have a blank box for you to add in whatever you want to add in. So if you want to add in a box for Albert Allen as a vendor, go ahead and do so. But I already have him as a commissions.
Yeah. Well, as long as we got him somewhere, I'm not
Yes.
going to worry about it. I just needed to organize it in my brain. So,
No
thank
worries.
you.
Mm-hmm. All right, so there is Albert Allen. So we hired 3 people, 2 employees, and 1 independent contractor. Good. So we're getting things along. We're getting things along. Okay. So after we went through the hiring process, now it is finally the next day. Let's see what happened here on June 12th. We decided to purchase a newspaper ad, right? So we applied to the Las Vegas Register Journal, right, to run our ad between the 15th through the 20th, right, during our grand opening sales. All right, and what it is we're requesting for a 4th page newspaper ad, right? And that's gonna cost $85. Okay, and guess what? We decided to pay with our business credit card. Okay. So, how are we gonna journalize this transaction? What did we do?
It's an advertising expense.
Correct, right? Because we just bought a newspaper ad. We are advertising our company, right? So in this case, this is the very first expense account, which is 60,000. Okay, and how did we pay for this?
On the credit card.
Which is what account?
It would be bank, wouldn't it?
Well, this is a business credit card. Is it our money?
No,
So how would you categorize a credit card?
it's a liability.
It is a liability, right? Because this isn't
Like,
our money. This is the money that National Bank Visa Gold decided to give us.
right, it's Visa payable.
It
So,
would be
20.
Visa payable. Good. 22,000. Okay? So that's exactly what we did. We bought some advertising expense. and we paid it using our Visa payable, right? We decided to pay with our credit card. How much did we charge our card for?
$85.
We charged $85. Okay. So we have pretty much all the information that we need, right? We have we have the person that we went to. We went to LVRJ. Okay. What was the proof of transaction?
Invoice 548128.
Good. And we paid for it with a Visa credit card. You don't need to put that there because it's straightforward, right?
Right.
And then what did we buy? Because advertising expense is too broad. We need to be a little descriptive here, saying that we purchased a 1/4 page newspaper ad. Okay. Do we need to put the actual specifications? Not here. Okay. So that should be good enough information right there. So let's go ahead and drop this into our ledger. So in this case, we have an operating expense, right? We purchased some advertising. Okay. It's the 12th, right? Well, again, we purchased a 1/4 page newspaper ad. Okay. We are on General Journal page 4, and we debited this by $85, right? Because we bought advertising for $85. Okay. Then we finally charged our credit card. So today's the 12th. Now, in this case, this is for your reference and your reference only, right? Because you can look up your credit card statement at any given time if you know how to use your online banking, right? But in this case, it only tells you the location of where you charged your card, and that's it, and the transaction number. It does not tell you exactly what you bought. So that's why your ledger is so important, because here is where you're going to match to what you actually bought from that person, right? Now, you could put the vendor's name in there if you want to. But in this case, I'd rather use it to make sure that we know exactly what we bought. So in this case, I bought a 1/4 page newspaper ad. Right? Because on my credit card statement, it should tell me that I charged it on this day at a Las Vegas register. Okay, and the transaction number on there. That's all it's going to tell me. But in that case, if I'm keeping a really good track record of everything that's going on, and I double checking work with my journal and stuff, I would already know that this transaction is the LVRJ, right? So General Journal page 4, and this time we're going to credit our account for $85. Okay? Okay? There you go. Now, because I paid a vendor, right, we need to ensure that the LVRJ make sure that we process, or that they process our newspaper ad in their journal on the date that was specified, right? So therefore, we need to go to our subsidiary ledger because we need to say that, hey, if you don't run our ad in there, we paid you, okay? So we're going to go to El Las Vegas register. Oh, it should be under LV remodeling. Here we go. Las Vegas RJ. So we purchase a 1/4 page newspaper ad to run from the 15th all the way to the 20th. Okay? And how did we pay? We paid with the Visa credit card. This is where I should notify that I paid with a Visa credit card, right? That's proof of a payment. Now, what was my invoice again? Number? 548128. Post reference once again. We're still on page 4. Was there terms? No. We paid at time of service, right? So what was the invoice amount for? $85. And because we made a payment using our credit card, right? That means I don't owe the Las Vegas Register Journal any money because I've already paid them for what they need to complete for me. So in this case, I paid them to run a newspaper ad, and now they have to hold up their end of the bargain, right? Because this is the contract that I signed and I paid. So if they don't run their newspaper ad in there, then we have to go and call and tell them that. Okay. All right. All right, and then again, this is an inventory, so we are pretty much done here. All right, so then let's see what happened next. We also decided to order a 2,000 advertising flyers from City Printers, okay? And they cost about 5 cents per page, and they're all 5x7 little flyers. Okay, 5 cents a page for 2,000 flyers. So 2,000 times 5 cents is going to be a total of $100. This company requires us to pay a 50% down payment to ensure that this job is that in case we cancel or don't pick up the flyers, right? That they did not lose out money because this is their insurance that we are going to commit to this project because again, we're putting out our information there. They're not, in this case, they're printing these things out for us. And if we don't come and pick it up, that's a waste of their ink and their time and their efforts to make all these things for us with our information on there. So in this case, right, that is also one of those things that a business can do is they can require a down payment to ensure that they're not going to take a loss for this project. So this is what they're saying. They're saying, okay, yes, we quote you for the 2,000 flyers, right? For 5 cents each, which is $100. We require a 50% down payment. And when the next time you come and pick up the flyers, you pay for the rest and we'll give you the flyers then. Okay? So this is a 50% down payment in order to say, yes, get this project started, right? Print those flyers for me. All right? So in this case, what am I going to treat this down payment as?
Prepaid accounts.
Prepaid accounts. And how did I pay?
Visa payable.
We end up paying with our credit card once again. So We got a prepaid accounts because we made a down payment. And we also paid with our Visa credit card. Okay, for how much?
$50.
So we paid $50. Okay. So we paid City Printers. Okay. In this case, do we have an invoice number or an order number?
Yes. 744136.
Okay. 50% down payment on flyers. Okay. All right. So that's all of our information right there. No need for the check register, no need for a purchase order, no need for anything, right? All right. So then now we can go to our ledger. Okay, so what do we have here? We have a prepaid accounts because we decided to make a down payment, right? We haven't received the advertisement flyers yet. So in this case, we are not purchasing advertising, right? We're making a down payment. Once their flyers are done and we come back to the store to pick them up, then we can recognize that we purchase advertising. Okay. So here we are, prepaid accounts. Down pay on 2,000 flyers. Okay. General journal page 4 still. And because we have the $50 down payment, right? That will increase my account to 6704.17. Okay. And of course, we decided to charge our credit card once again for 50% down payment. So now that we charged $50 to our credit card, we are now at a credit balance of $135. And now we should definitely edit our information for our subsidiary ledger because we paid a vendor for some services. Okay? So City Printers right here ordered 2,000 flyers, 50% down payment. Okay, with the Visa credit card. Invoice, do we have an invoice number? 744136. And post reference once again, page 4. No terms yet because our only terms that we have to know is that we are gonna pay up for the entire amount upon pickup of the flyers. There's no actual real terminology for terms for that, right? We just know that we're going to be picking it up at time of purchase. But what you could do too is you could say cash on delivery, 50% down payment, whatever it is that makes you more makes it clear for you to understand. But in this case, no real terms. And once again, we're not going to fill in the prepaid. We're going to fill in the invoice amount because we're acting as if this invoice right here told us they're going to charge us $50, right? And we paid using the Visa credit card. So right now we owe $0 to City Printers until the day we go pick up our flyers. Then we'll go ahead and fill in the rest of the information. Okay, let's see. Okay. All right. So we paid the $50 with a Visa payable. So let's see what happened next. It is the 12th of June, Wednesday, and we received our inventory. Right? We got perpetual regular coffee, moving average. And we also got perpetual supreme coffee using the FIFO method. Okay? Here is the bill that we received. Okay? We received it from Atlas Coffee Importers. They gave us a 1% 15 net 30, right? And they delivered it by freight. Okay, here is the 125 pounds of regular coffee and 125 pounds of supreme coffee. One for $1.35 and the other one is $1.55, which gave us those totals right here. So in this case, the total came out to be a grand total of $332.50. Okay. So what do? We just received our perpetual inventory coffees. How do I recognize this in my journal?
Well, it's now inventory, and so it has to go by like we did coffee mug thing, that sort of thing, because it's been received. So you put the coffees, and we keep them separate in the inventory, right?
Yes.
Okay. So you've got to have an account for or something for the regular coffee and the supreme coffee.
All right, let's take a look. All right, let's take a look. Do we have inventory?
Right there. Yeah.
Right here we have our regular coffee and our supreme coffee, $12.20 and $12.40. Now, why are we using those accounts versus a purchase expense?
Because it's perpetual, is what you said.
Exactly, right? Because of the way that we're keeping track of it, we're gonna automatically transfer all of these into the proper inventory accounts, right? Where a periodic inventory, we're gonna treat it as an expense first. Okay? So therefore, we're gonna be putting in our regular coffee and our supreme coffee, and we're gonna owe it on an account. Okay? So we got regular coffee. And we got supreme coffee. And we have how much regular coffee did we acquire? Did we buy?
168.75.
168.75, right? Rules of journalizing, you have to use the monetary unit or monetary measurement in this case, right? We need to measure this in terms of value, not quantity. we're going to record that quantity in our inventory worksheet. Right? So in this case, that's what the total cost of 125 pounds of regular coffee was. What about Supreme coffee?
193.75.
Giving us a grand total of
362.50.
$362.50. Right? And we have all the information we need for this. We know we received from Atlas Coffee Importers right? What was the proof of our transaction?
Invoice 315.
Okay. We were given terms of a 1%, 15 net 30. Okay. And any other additional information do you think is necessary? Do you have to write that you have 125 pounds of regular and 125 pounds of Supreme?
No, you can put that in the other places.
Correct. Good. Right? In this case, we already got the general idea that we received coffee from this person and we have to record a bill. Okay? Good. So let's go ahead and plug our numbers into our ledger. So we're finally going to be having inventory. So, assets. This is going to go under our inventory for regular coffee. Okay. So this is where I'm going to go ahead and put said I purchased 125 pounds of coffee. Now, do you want the unit price? It's up to your discretion, but at the end of the day, we're going to put the total cost of it anyway. So if you wrote that you have 125 pounds, how hard is it to just divide it by your total cost and divide it by the 125 pounds and you'd find out your unit price? You don't necessarily need to have your unit price here because it wouldn't even matter. Because once we do with our inventory worksheet, depending on how we cost out our inventory, right? Would it really matter on how much you purchased it for?
No.
Probably not. So in this case, that's all I'm going to put in here. You can put the unit price if it makes sense to you. Again, it's your ledger, it's your journal. So if it makes you feel better, go ahead and put it in there. But for now, for me, I'm not going to put it in there. I think purchasing 125 pounds is good enough. We're still on our fourth journal, and we debited our account for $168.75. Okay. Okay. And then we also have to do the same thing for my Supreme coffee, right? Because I also purchased 125 pounds. Now, in this case, do I have to identify that this is Supreme coffee? No, you're already in the account for it. It makes no sense to have to repeat information. Okay? And I have $193.75 worth. Okay? And now I need to record that I owe more money in my liabilities. For $362.50. Okay. So then, of course, now my total accounts payable account is at $14,116.40. That's a lot of money we owe. Okay. So now that I did the ledger, I did the journal. Next is, well, we owe Atlas Coffee money. So that's definitely something we definitely need to record in our books. Okay. Atlas Coffee Importers. Today is the 12th. This is where you could say we purchased 125 pounds of regular coffee. And 125 pounds of Supreme coffee. Again, do you need to have the unit price on here? It's up to your discretion. Invoice number 315. And we know this is General Journal page 4. Did we have terms? Yes, we did. If we pay within 15 days, we can receive a 1% discount. Okay? So, what is 15 days from now? When's my actual discount due date? 27. And when is the actual bill due?
The 11th.
The 12th, because there's only 30 days in June. Okay. All right. What was the total invoice amount for? $362.50. So let's go ahead and run our formula once again. Invoice amount minus prepaid minus returns minus discounts minus payments. I owe $362.50. Right? And that's what my grade tells me. Okay? All right. If I want to keep this in mind, that I have until the 27th to pay for me to receive a 1% discount, maybe I will pay for it. Maybe I won't. We'll have to wait and see. Okay. Now that I plugged all my numbers in here, I now can go to my inventory worksheet. Okay? Because I just received inventory, right? I got regular coffee, I got Supreme coffee. Okay? So let's take a look at the first one. We got some regular coffee, right? I already filled the table in there for you. We're going to be using moving average, okay? And it's perpetual. So in this case, today is June 12th. We received our inventory so we could skip the cost of goods sold. We got 125 pounds. What was my unit cost? You remember?
No.
It was $1.35 per pound. So therefore, what is my total purchase expense?
80. Oh, shoot.
The 168.75, right? The one that was already pre-calculated.
Yeah.
Okay. Now, is there any freight expense? I'm going to tell you, let's hold on for that. Okay. So we'll stop here, and then we'll continue on later. Okay. Supreme coffee. Right? What kind of costing method are we going to be keeping track of this? We're going to be using FIFO. Okay? All right, same thing. We got to plug in our numbers here. We did not sell anything yet, but we acquired 125 at $1.55. So that should give us a total of $193.75, right? We know that. Okay? So like I mentioned, we're going to pause here for now because let's see what happens next. Okay. All right, we got to go ahead and we can't forget to update our purchase orders, right? Because we did receive our coffee. Okay. Let's see. Did we receive our refrigerator yet? No, not yet. But did we receive our coffee?
Yes.
Yes, we did. We received it on June 12th. And once again, format this. What was the invoice number? 315. Right? That's what we received it as. So we never received our coffee brewer, coffee grinder? I thought we did. We did on the 10.
That's when we learned about the expense or whatever.
Okay. Yes. So June 10, I believe, if I remember, this invoice was invoice number 351. Okay, that's what I thought it was. 351. Okay. So let's see. We received our first order, our second order, third order, fourth order, fifth order, sixth order. We're still pending on our seventh order. Okay. Good. Okay, so then now let's go ahead and confirm what should happen next. Okay. All right, we also end up receiving a second bill. What is this bill for?
It's the freight.
It's the freight. They end up using, again, a freight line company to deliver the coffee to us. I mean, it makes sense, right? It's shipping from California all the way to Vegas, Nevada, right? So in this case, how do we record the shipment of our perpetual inventory?
Well, you would divide the evenly 50% to each because they're both 125 pounds.
Good. So right now it's currently at a grand total of $62.50. So you're going to divide that by 2. All right. And okay, so how am I going to journalize this?
It would be called it's perpetual.
Mm-hmm.
Is there a shipping expense or something somewhere?
Shipping expense.
Well, it could be an inventory because it adds to the inventory total.
Correct. For perpetual inventory, you shove every single cost into inventory because that's the rule. So whether it's tax, whether it's shipping, whether it's handling, whether it's expedited fees, all of that's going to go straight into inventory because it's perpetual inventory. It's going to be included in the cost of inventory. So therefore, we're going to also put them in the regular and supreme coffee accounts. Okay? Now, how did I pay for this?
COD.
COD. So what does that mean?
Checking.
That means I'm going to be writing another check, right? But this is also going to be proof that we paid for the coffee, right? That we received the coffee. In case they come back at us and said, no, we never received your payment. Well, we received the coffee, so yes, you did receive the payment. Okay? So again, right now it's a grand total of $62.50. So how much is going to be for the regular coffee and how much is going to be for the supreme coffee?
$31.25 each.
Okay, so I'm going to take $62.50 divided by 2, $31.25 each. Okay, and that should give you your grand total of the $62.50. All right, now I need to write my check because, again, if they demanded that it was cash on delivery, that means I had to issue that check right as when I received the inventory items. So in this case, today is the 12th. We got check number 1513. Okay, and this one is going to be for a grand total of $62.50. And who am I going to write this out to?
Freight line or freight delivery or whatever.
Yep, Freight Line, right? Here's the vendor's name, Freight Line. And what was this for?
Shipping coffee.
Okay. So now that we have the wrote a check for 1513, let's go back to my journal. Right, I received an invoice from Freight Line. Proof that my transaction was there was invoice number 482. Okay. This was COD, cash on delivery. So therefore, we wrote a check number 1513 to pay for the shipping cost for the coffee. Okay. All right. So now that we got our shipping cost, we wrote our check out, right? Let's go ahead and plug our numbers into my ledger. Okay, starting with regular coffee. Right, shipping cost. Page 4 for a total of $31.25. So that should give you a grand total of regular coffee to be
$200.
$200. Okay. And of course, we can drag my formula all the way down. Okay. We got to do the same thing to my Supreme Coffee. Shipping costs for $31.25. So therefore, how much is going to be in my Supreme Coffee account?
$225.
Say that again?
$225.
Yes. $225. And again, I'm going to drag that formula all the way down. And of course, right, we can't forget to make a payment, right? Or remove the money out of our checking account. For $62.50. Okay. So how much should be left in my checking account after making that payment for $62.50 for shipping?
$54.89.92.
54.8992 cents. Okay. So I got my journal, I got my ledger. So I need to also pop this number into my subsidiary ledger because I made a payment to another vendor. I need to ensure that they receive my payment and that they have confirmed that they sent me the items. So in this case, this is Freightline. So F, that's City Printers. We got Computers R Us, Freightline right here. 612. Shipping costs for delivery of coffee, of 250 pounds of coffee. Okay. And we use check number 1513 to pay. Okay. What was the invoice number on that right here? 482. Once again, we are still on my general journal page 4, and the terms was cash on delivery. Okay. So therefore, it was quoted for $62.50, and because it was cash on delivery, we had to pay. So, formula once again, invoice minus prepaid minus returns minus discounts minus payments. So right now, I owe Freightline $0. Okay. But this is good, a good track record, so then we ensure that we received the coffee. Okay. So then now we need to go ahead and plug this into our inventory worksheet because now we have the freight for the regular coffee and the freight for the Supreme coffee. So in this case, we can add in that $31.25. So therefore, my total cost, which was the $200. Okay. So in this case, do I need to do a cost per item for my regular coffee?
No, because it's moving average.
In this case, right now, this is the only batch of coffee you have.
So you need to know.
Well, yes, because in this case, what if I start selling stuff? Then yes. First rule of thumb, when you first make a purchase of inventory, your average cost is going to be the first batch of inventory that you purchase anyways. It's the only batch that you have, right? But as we progressively acquire more and more and purchase more and more and more coffee, then our average will start changing and we don't need to do the per individual ones, right? So in this case, I'm going to go ahead and figure out what 200 divided by 125 is.
$1.60.
$1.60. So once again, because we're using perpetual inventory, I'm going to go ahead and transfer this amount into my inventory on hand. Okay? Because it's moving average, I'm only going to copy my quantity and my total cost because what this is going to do is I'm going to constantly be calculating my average cost per item. Okay, so my formula lies into my cost right here, and this formula is going to be dragged all the way down. Okay, and in this case, for this one, I'm going to go ahead and also expose at least 5 decimal places. Okay. All right. So right now, currently on hand, I have 125 pounds of coffee at $200, which cost me $1.60 per pound. Okay. I need to figure out what my regular coffee is, right? Because now I have 125 pounds, right? We are going to add the freight to this to be $31.25. So what's my grand total cost here?
225.
The 225. And in this case, because we're using the rules of FIFO, we are obligated to have to do the cost per item because we need to figure out what they cost for each batch. So in this case,
180.
it's going to cost me $1.80. Okay? And because we're going to carry it into our inventory worksheet, right, it's going to be 125 at $1.80. In this case, we're going to have the formula in my total cost. Or if you want to do exactly like moving average, where you're constantly calculating your average cost with your, you're constantly calculating your quantity and your total cost, right? And you're updating it both numbers. Just know that your cost per item will not change unless otherwise. Okay? So there you go. I have my first batch of inventory for 125 pounds of Supreme Coffee at $225, total at $1.80 per pound. Okay? Awesome. Okay? So I'm going to stop here, and then we will continue on the 13th of June. Okay? All right? So we're going to go ahead and stop and take a break real quick.